All right, guys, just wanted to show you a quick little something here. So I almost put this on the hot list yesterday because I like this setup. It's a classic break and retest. We can see here we had a clear resistance level of here. And remember, resistance is more of a zone. So we can see hard resistance, and then we had a little bit of a breakout here of these resistance levels, came back down, tested this upward moving average. Finally, it's breaking above this resistance level here. So in all, I did like it as a trade for breaking out of this resistance level. And you can see here that price, this was yesterday, price was actually testing this zone. So I always talk about a break and retest and then retest the previous pivot levels. Well, I guess there were some sovereign policies that came out. I don't know, President Biden mentioned something or other about some policy, and basically the market reacted and it tanked. A lot of the stocks, if you look at a heat map, the market it didn't tank, but it dropped a little bit, and that's what happened today. But the lesson that I want to teach you guys is why we use a buy stop limit order above the previous day's candle to get triggered in. And the reason for that is, let's say you did basically buy into it on this day because it was a bullish candle. It was almost engulfing in this area here. Let me zoom in. It's almost engulfing. Well, actually, it did. It just didn't engulf the high, so it engulfed the previous day's body. So let's say you liked it and you bought it. Well, the very next day, today, when Biden came out and spoke and about some policy, um, it actually dropped, and it went up a little bit above yesterday's high, above yesterday's close. Very bullish candle. And some policy came out today and the price dropped. Now, it's not to say that these other resistance levels won't be tested. As a matter of fact, I mean, if you go back, I mean, you see this one's here. This is basically retesting this previous pivot level. So tomorrow, when things are all nice and dandy, it could go back up and you could possibly get a better price on it. But what I'm trying to say, basically, long story short, is that the reason we get triggered above here is so that we don't deal with this drawdown. We use a buy stop limit order above this candlestick, so somewhere like right there, to trigger us into the trade so that way we catch the momentum. We want to catch the momentum to be triggered into the trade as it continues to go up. If we were to just do a buy market order yesterday before the close, we would have been caught in this drawdown here. Now, that's not to say that it's not going to retest this zone and head back up. It still could do that, and we could still get it at a cheaper price. Matter of fact, that might be the best bet, is that if it comes down and retests this other pivot zone that I had drawn here, and you can see that there's another pivot zone back here. So these two here, or it could come even lower to this one here, or it could come back down to here. Um, so I would love it here actually, because it's right on the 20-day moving average. It's in between the 9 EMA and the 20, which this whole area is the bullish buy zone. We got confirmation that it's pretty bullish because you got these two expanding moving averages. So that means that momentum is basically speeding up. So any one of these levels would be a great buy level: 588, 574. But long story short, sorry, I get caught in the technicals, is that's why we want to use a buy stop limit order above the previous day's high. That way we don't get caught in this drawdown here. So as always, glad that you guys are here. Let me know if you have any questions. Be more than happy to help you out.